There she goes. We kind of like couldn't catch this move. Man, I was just waiting for the London Open. Like literally that's all I was waiting for. If this could just have broken out with the London Open, it would have been like a little bit more comfortable. Man, fucking buys, you know, because the daily bias is bullish. So looking for mainly buys right now. And I wish we caught this one. This one was so clean. Literally like 3 minutes. See, that's what I'm trying to avoid. You see this? London Open. Right over here. That's what I was trying to avoid. But it looks like it gave like about 26 pips before pulling back like this. We want to avoid this volatility. Freaky Friday over here. Price moving up. What is good? What is good, everybody? What is good? We might be breaking into like some range here on the 5 minute though. We'll see how it is. Got support, got resistance up here. Come on, Goldie, fly. See, daily time frame. Holy, what happened yesterday? Daily candlestick reflip back down bearish. But we got the jobs data came out like poor for the US economy. So, you know, that's why gold is moving up here today as well. Actually, the interest rate decisions should have gone up now. So let's go and have a look for interest rate cuts. Those should have increased. Should be partly the reason price is moving up. From 69, we were at 69 before. Oh, what? It went down? 66.9. Thought it went up. It said it went up. Why are we moving up then? Up like 0.80% on the daily. Let me see where we're currently sitting at here. It's a much bigger range to break. Boom. Let's see, crazy week. Tough week. Lots of recalibrating here on gold. You know, still up for the week, so let's see. I would like to see a few more candlesticks come down, to be honest. I'm not like too keen on the breaky right now. Damn, we got clean range on the 5 minute right there. Stops a little big. Let me try. Like put it below here. Yeah, maybe we can use that support. That's that wick from the London Open. All right, let's see. Let's see how this is. Take your time, Goldie. Don't rush. Don't rush. Don't you dare rush on me, Goldie. Don't you dare rush on me. All right, so good little pullback over there. Now let's see how that 5 minute. I'm looking for a liquidity grab there on the 5. That'd be nice to see. Get a bumper clot here. Oh, hello, ¿cómo estás? Google morning, dobre jutro. Thank you for your work. Thank you, Mark. Dobre jutro. Come on, Goldie. Let's fly. Let's fly. It's getting ready here. The daily is, do we have room to move? We got like a little wick fill situation there, maybe up towards that daily resistance point. We took back 4,000 psychological mark over here too, during the pre-session. Above $4,000, man. I tell you, this 4K mark here has been the battlefield. This taking 4,000 psychological, so you know we're back above it again. And I think we can like pop up here, like head towards, you know, 4016 resistance on the 5-minute. Starting to break above. You see, we need to get through this zone. See this zone here on the left hand side? We can like get through this zone. Oh, we can get through that zone over there. I think price can stop moving up. So you just got to break through this level here. Then we have around 50 pips above that level. Still rejecting. Creating a support. See from here to here. All right, decent. Get to Morgan, my G. Good morning, GPjpy. There's a 4-hour zone, 4-hour zone that is rejecting from 4-hour. Oh, yeah, 4-hour here. That's why we're accumulating right now. We're trying to break through that level. Getting some ammo in. These guys are just getting mitigated right now. Previous buyers from before the London session opened. There was a nice little 25 pip move there. Come on, Goldie, let's go. Freaky Friday, just one more trade. One more trade. Alright, looks like we're coming up here. Alright, looks like this candle might be the one to trigger me in. I would actually like it if this candle... The 5 minutes a bit extended, but it would be nicer if we could get this 1 minute candle here trigger me in. Because it just had a big push on that previous one. I just want to see the conviction come into the market. We need to see conviction. This creates another resistance here. Like, I would rather have a deeper pullback then. Sellers got liquidated down there. Right over here. They got squeezed into their trades. So you got other stop losses above this region over here. So I'm looking to squeeze out the remaining sellers above 4010 over here. Yeah, alright, give us a little pullback. I don't mind waiting. We need a new 5 minute, you know. At this point, this 1 minute candle might as well just close, like before breaking, because we get a new 5 minute candle open. That'll be a lot nicer. Then, you know, that's gonna be my last trade for Freaky Friday. Man, I really hope that it don't break yet. 20 seconds, man. This thing can still break in the last 10 seconds. Hey, Pa Busy, thank you for the sub. And like, see from here to here, I might adjust the break-even spot. New 5 minute open. Yeah, we might have to adjust that break-even spot. Because there's a entry that might come in sooner right here. Now I just got the new 5-minute candlestick. So I want to see this thing like create, you know, it's created a bottom wick, perfect. Let's see if this is the one that can skyrocket above this zone, because we're currently at a point A right now. We haven't yet had distribution. All right, looks like this is it. Ready to go, Goldie? It's just had a small break. Small break. Small break. We're waiting for a solid break. All right, nice. I'm expecting price to keep moving up. If it doesn't move up, I'm just gonna manage here and call it a day. Yeah, we need volume. Come on, Goldie. You cannot come back into the range. Don't you dare pull back into the range. Come on, Goldie, fly. Oh, that nice little SMA dynamic support, at least on the 1 minute, just in case it retaps it. You can see the 5 minute is trying to break out right now. Look at the 5 minute time frame. We're trying to break. We're trying to break. We got 2 minutes, 20 seconds here for candlestick to close. Man. Come on, Horo. We only got that 8 SMA left. That's the only thing pulling us up right now. That's it. That's the last dynamic support right there. I was like one of the last reactions. Oh no. 1 minute candle literally just flipped bullish there in the last 5 seconds. Come on. 1 more minute for the 5 minute closure. Now we got to worry about that next 5 minute candle open pullback. Should be nice if we get one solid push from this 1 minute candle here. It's got like 35 seconds. Come on, Goldie. Where's the volume? Wake up. Wake up. You got this. You got this, buddy. You can do it. It literally triggered in the buyers and now it's consolidating here, playing psychology games. You see right where the entry is. See how it's wicking over there? Serious psychology work. You just got the new 5-minute open. 5-minute candlestick just closed above resistance. We would like to see this thing continue to follow through here at this point as well. If it comes back into the gulag, then at that point, I think price is just going to range up until God knows when. But we should actually be getting the distribution outside of the zone right now. We shouldn't be coming back into the gulag. Oh, man. Don't be boring, Goldie. Because if this candlestick closes like this, that's just going to be a fake out. Because you got a 5-minute candle open, close above resistance, and then this 5-minute will close back inside. Oh, come on, Goldie. No follow through? Not today? And... okay, screw it. I'm out. No follow through. Managing right there. Nah, I'm not gonna play with gold, man. This week gold has been kind of like fishy, so if I'm not getting that follow through, I'm gonna manage it properly. Yeah, it was such a nice setup too. I don't know why I went up there to grab the buyers though. You see how it's like wicking around this area? It just triggered in some buyers. Probably like try to squeeze them out. Crazy thing though, it trapped the sellers down there, now it trapped the buyers above. Such a nice setup too. Like, this is such a nice setup. Boom, boom. Should have just moved up. Boom. Price is in a 15-minute FVG. I'm still in SL below 1-minute structure. Wait, what 1 minute? Oh, this 1 minute right here. Yeah, I guess that will be the last minute structure by 4007. Bullshit. A 5-minute close back inside the range. Struggling. It was broke above, broke inside, back below. This thing's probably gonna range, you know. At this point, it might as well just come here. It ruined the fun for everybody. Gold ruined the fun for everyone. Might as well just come in here, Gold. Just do your thing. Do your thing, liquidate people. That's what you do best this week. You see, break below here, pull up. Break above here, pull down. Just stay in the range, Goldie. It's all good. It's all good. Just break out later. We're gonna get you later. Right now, it's the best time not to touch gold. Just leave it alone. Let it break out when it breaks out, and then you're gonna get it at the next point in time. Maybe that's gonna be like pre-NY if you're planning on trading again. Maybe New York session time, because it's gotta do its work here. It's gotta work on people's account for a bit now. And man, you don't want to fight gold. You don't want to fight gold when it's doing this. New 15-minute open too. Oh, new 15. Oh, okay. So we also had the 15 close above that area over there. Man, the 15 looked clean too. Broke above. Had really nice range to keep moving up here. Yeah, I was really hopeful for this. Especially, you know, the reason why is because the whole week we haven't had like very, very nice volume. So sometimes it's pushed towards like the end of the week. You know what I mean? It's not playing nice. Yeah, it's not playing nice. I agree. Let it settle and do its thing. It's in the gulag. Yeah, it's in the gulag. It's in the gulag. Very difficult, because the only way you actually win trades now is if you're trading in the gulag, maybe. Taking buys from the lows, maybe selling at the highs. I always find it quite funny how the psychology of the market reacts on my entries though. Look at those wicks. One wick, dude, then just pull down. Give a little bit of hope, pull down, a little bit of hope. But you could see that the volume was dying, actually. Because usually your best trades don't behave like this. Because usually that just means that it's already showing to you that there's something wrong. But the problem is it's harder to manage on that because it happens so fast, you know? It's like these are just wicks. Like there's no structure. It's more of like you're just reading intuition and volume and hesitation. But it's a lot harder to manage based off something like this. This should have actually been the next candlestick to break. It would have made it a lot more cleaner, more conviction, you know? Like, okay, perfect. We got the London session open. We're finally breaking. You could already tell slightly as we're coming into the entry that something was a bit funny. See, pull back down again. Then it tried it here again. Because it could have just done it with this one. Maybe you can say I was waiting for the new 5-minute open. Boom. Broke the highs, and then it's like a dead firework. You know, like in Harry Potter, when in the game when they're trying to do the spells and your spell meter's already run out, and the guy's like, damn, what's wrong with this wand? And it's just sparking like can't do no spells. That's what's happening here. And then, you know, you gotta wait again, gotta wait for it to refill. What made me buy? Better question is, what made me get out of this trade? Because see, now instead of risking 52 pips, I managed at 20 pips. As long as we respect 4004, we will be good. Yeah, the next support would be definitely like 4003 over here. You got a small range towards that support, which is about 20.6 pips. But you can see it's doing some serious psychological work here. You can even see where the candlestick closes. Right here. This is kind of what I call like fidget spinning. No follow through down, no follow through up. Maybe you get lucky with trades within the range, which there was actually one we could have gotten, but it happened a bit too early. This happened too quick. Because London session opened here. Right here. The trade was happening a few minutes before London opened. But that's what we try and avoid. This kind of wicks already being in a position. Because you can be in a position before the London opens and be slightly in drawdown. Maybe it doesn't play out in time. Then you get the London open and you kind of open yourself up to that volatility. And we're just trying to catch the move. No, we just want to see price move from here. Because it's clearly consolidating. So we're trying to catch the extension. Which it should actually be bullish. Because we are bullish on the daily. That's what we're trying to catch. It's eventually going to do this. You know, the question is, how is it going to do this? You know, are we going to go down? Are we going to go up? Are we going to fake out a few more times? But it is going to move. It is going to move from this area. Why don't I use the 3 time frame or the 3 minute? I don't know. It's kind of an awkward time frame, to be honest. I always feel like the 1 minute, the 5, 15, 30, they seem kind of balanced. Like I used to use a 3 minute when I used to trade Fibonacci's because I couldn't get setups on the 5 sometimes. So the 3 minute would give like some kind of entries. But it's a weird time frame. It's like trading the 2 hour time frame and 3 hour. Maybe makes a head and shoulders and moves down. A 5-15 minute looks so clean though. Damn. Really hopeful for that. See how it's taking out these buyers over here are still holding? But we got out quickly. So it's like when you know the plane is crashing, you gotta jump out quick with your parachute. You should always like literally be at the door. You know, you should always be at the door. You gotta imagine like every trade is like a plane that, you know, might crash. So you always gotta be prepared for any kind of like weird signs. You know, you gotta sit by the door. Then maybe you're gonna see an engine start sparking up. Then you're like, okay, so you know, I think I'm gonna get out now. Maybe sell if it breaks down. Nah, I'm not touching it no more, man. If the trade doesn't play out, I'm done. Simple. Because that means there might be a shock in the water. So, you know, if you're gonna overtrade this zone, you can compound your losses. And then maybe the winning trades are only gonna come like later on. That's why I managed my risk, still ending the day here at 1%. Ending the week at about 2. And push it, just keep pushing it till next week and just take it slow. And something like this would be nice as well because it's at the bottom of the range. At least we're not looking for the breakouts here. It's like here, but at least we're not looking for the breakout because that's what it's having a hard time with. If something like this would have given a better probability inside the valley, you know, like how it was inside a valley here. And that played out to resistance and then had the reaction. So right now it's inside a valley as well. Those are like safest entries if price is not following through anywhere. John Wick. Price will be playing ping pong for some time. Save your bullets. It's forming a 15-minute bearish divergence. Could be. I don't know. I just see it ranging. On the 1 and 5 minute, we have a 5th wave of Elliott wave creating A. You can send in a chart. We can see. You can send your chart in here on the Discord, and we can have a look at it. See the Elliots, Mr. Elliot. I only trade the 1 minute time frame. Oh, nice. Nice one, Doris. But you definitely do need like confluence, though, right? Like, if you look at that higher time frames, they're definitely going to give you like an idea of how good your trade could play out. Hold it, bro. Trust. This is why I don't trust anybody telling me trust. Stop loss would have been hit. Hey, bro, just popped in. Hope you're doing well. Quick question. Any particular reason why you don't? Oh, okay. We answered that. Explain the last trade, please. Follow me on my social media and you're going to be just fine. Follow me on Instagram. Follow me on yeah, Instagram and YouTube. You know, I also posted on YouTube there. I'm gonna hold. Fuck it. Brutal, brutal, brutal. Especially if it melts right now because, you know, it had no business taking out those highs. Like, if it does actually end up melting, that will just be a brutal liquidity grab. Like, literally mopping everybody up here. From stop losses inside the ranges to all the way above here. At the same time, it's quite profitable because it also gets the buyers in to push price down. I don't know what you call it. I call it a shock. I call it a shock in the water. Maybe you're going to call it a market maker or something like that. But they do pop in every now and then, you know. That's the guys we're trying to avoid. They're the ones who make a lot of money in these ranges because, you know, people are just buying and selling inside these areas and racking up commissions. Like, also Mark Douglas talks about this quite a bit. That's why I try and avoid these areas. Because it's just purely to generate profits for the market. It's not for investors. So if I take like a losing trade, done. I'm just gonna get it in the next area, because eventually the market has to pay off the investors, right? It can't always just like fake people out, etc., etc. It has to pay people, just like a casino. If you would always lose in a casino, nobody would ever go to a casino. So you have to eventually pay people out. And that's why Warren Buffett says the market is an instrument from transferring wealth from the impatient to the patient traders. So, you know, it is gambling if you treat it like gambling. But if you're gonna like sit on your hands and, you know, just wait, then I think it's the best thing. I want to pass my challenge, remaining 153. Godspeed. Any other setup later today? No, I'm done for the day. We'll only have a simulation this weekend in the exclusive, but yeah, that's it. It's already been an obviously choppy week on gold. So the best thing that you could have done this week is maybe end at a break even, a little profit, or like a small loss. I think that would have been the best outcome for this week. Just because, you know, we had the jobs data, and like if you look at the daily time frame, it's like it's a bit indecisive. If you even look at yesterday's candlestick, it was fully bullish, and look what happened. It reflipped and closed down bearish. And now we got to deal with this resistance over here by 40.30, and we got a support right here. So we're also in a range on the higher time frames. You know what I mean? So it's not like the easiest. It's not the easiest point, because the higher time frames will give you signals on what you can expect on the LTF. It's not the easiest like PA, where we're seeing like price flowing nicely and not staying in zones too long. So what I'm anticipating is next week it should actually follow through. I really do want us to break out of this zone, so at least we can get some cleaner PA, some nice extensions like that, maybe up towards like 41.20, get a bullish week up ahead of us. That would be the best case scenario. Because I think if it comes down, it's got a lot of like speed bumps. You know, we got like support here, we got support here, rejection wick. It's a lot harder for price to move down at this point than it is if it just broke above to keep moving up bullish. So that's what we need to get into, chat. We need to get into this open water over here. Need this open water. See, back to the bottom of the range and back to the top of the range. John Wick. But you know, like when price accumulates like this, man, the breakout should be big. Should be getting a nice juicy breakout here. Just like this morning, man. This morning's trade was awesome. Like it looks so nice. It looks so nice, and we had double confluences here and then here as well for the breakout. So clean. Daily was bullish. But it's the same thing that's happening here. Boom. I like it arranged like that. The distribution which follows will be juicy. Yes, sir. That's the thing I was trying to catch, the Freaky Friday Bumbleclot. Daily candle above 8 EMA, so today and next week looking bullish. It's got to respect these lows because it's doing a reversal confirmation on the 30-minute. See, I broke above this resistance over here. So if it breaks below like 4,002, this thing could pull down. Got an 85 pip range, so it's really got to respect the zone for price to break the highs to keep moving up. You know, I trade the consolidation a bit different last 1 week and avoid some fake outs like that. How'd you trade them? If you would take a trade today, what would you like to see? I would have liked to see what I saw here. This was nice. Because like price already distributed from that first pre-session move. And then it accumulated here again for bullish continuation. That would have been the most ideal. And this 5-minute candle close above, re-break the highs, and then keep moving up. There are multiple fake outs, even one over here. How it broke like this below and then like ripped back upwards. So you can see the characteristics, right? You can see it on the higher time frame here and above here. And you can also see those smaller plays, those smaller fakies right over here too. So I closed below that mini structure and then moved up. So it's just characteristic of price right now. But obviously the buys would have a better chance of playing out because it's more bullish. Elliott wave on the 5-minute, creating ABC. A. Dun 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 dun. So what's the next one? Is it to move up or down? Because the last one was up here. That's 5. Would it be 6? And then 7? One more down before going up? Yep. Gold rises on higher US rate cut bets after layoff data. Gold prices in early trading after the latest US data showed a surge in October layoffs, boosting expectations for the Fed interest rate cut in December. Futures in New York gained 0.6%, all right, and are on track for a weekly gain of 0.5%. I think that weekly is still a doji. Analysts at BMI expect gold to stay elevated in the coming weeks, but note risks are skewed to the downside due to uncertainty over a potential December cut. While Fed officials remain divided on policy path ahead due to limited data. Support signal weakness in country's labor market and lifted expectations of another US interest rate cut. But that's why I'm wondering why, if you go on the Fed, on the CME website there, it's like it's actually went down, the probability, but they're saying it all went up. While a prolonged government shutdown also boosted safe haven demand. See, the US economy shut jobs in October amid losses in the government and retail sectors, while cost-cutting measures and the adaptation of artificial intelligence by businesses led to a surge in announced layoffs. Wow, look at that. Adaptation of artificial intelligence by businesses led to a surge of announced layoffs. Holy. Coming for your job. AI is coming for us. Take everybody's job. Take my job too. The private job data is still indicating that a rate cut in December is likely, and that's why gold prices are getting some kind of support. Well, it would be nice to see that support there on the London Opens. Let me label a chart. Well, the trade I just took before yours. All right. There's a reason Nvidia and AMD is flying. Yeah, Nvidia is doing amazing. And like, who competes with Nvidia? Like, honestly, AMD focus more on CPUs. You know, and just when you just talk about gaming, like NV graphics card are superior and they do a lot more than gaming. And yeah, AMD like focuses a lot on CPUs. How's like a CPU made? You know, when you get like a Core i7, Core i5, Core i9, you know what that is? It's the purity. Apparently, it's the purity of how the final product came out. Because some products, they come with like inconsistencies. So let's say if you're trying out for an i9, but there's sectors which were missing, so it makes it like into a Core i5. So the higher the cores, the more nicer that the chip came out, which is kind of crazy. Kind of crazy to think about it. Got a Core i5, you just got like some kind of defective chip that could have been a Core i9. Let's see, Alex Carp blasts big short investor Michael Burry as bats crazy for bet against Palantir Nvidia. Oh, it was this guy. His betting against Palantir Nvidia. is going for another Big Short movie. Welcome to CNBC. Please turn off your ad blockers so we can make money. See, the two companies they're shorting are the ones making all the money, which is super weird. Carp told CNBC Squawk Box on Tuesday, the idea that chips and ontology is what you want to short in. But when I was really focused on fundamentals, when I started really getting into it, I wanted to get the Squawk Box thing. Get like a nice little subscription on it. Because it's like live radio, right? It's like live radio. It's faster than Forex Factory too. And you know, like they might say something and you're trading and you overhear something. Plantain shared slid 8% on Tuesday, even after the software company bet Wall Street estimates for a third quarter and offered an upbeat guidance. Investors have grown increasingly wary of lofty valuations in AI-linked names. Let's see. Palantir's stock, which was up 173% for the year heading into Tuesday's trading, has forward price earnings ratio of 228. Nvidia fell 4% after gaining over 50% this year. Yeah, but I think like Nvidia was pretty high. It's like gold. It's like gold. Okay, so Nvidia fell 4% after gaining 50%. Gold gained 66% this year. And it's down to like 50%. So it's like we're towards the end of the year as well, and I don't know. I think it's just like, just also kind of like pullbacks, profit taking. I do think this behavior is egregious, and I'm going to be dancing around when it's proven wrong. Yeah, we're gonna wait and see. We're gonna wait and see. There's also like, there was this story about an entrepreneur. Like, I like how they go against these ideas usually. When it's like someone has a crazy idea, then it ends up playing out. This one on CNBC of an entrepreneur, CEO who decided to give majority of his earnings to his colleagues. So he made sure everybody in the company was getting paid at least $70,000. And everybody was saying like, oh, this is going to end well. And like everybody was saying this is going to end bad, because most CEOs get paid like 300% plus more than the average employee at a company. But this guy was like, decided to get paid everybody equal $70,000, and he paid himself $70,000 as well. And apparently the company is still doing well. So yeah, man, you gotta motivate your employees, I guess. But it's so wild for a CEO to cut his profits that much. But hey, it worked out. The company still exists. So let's see what this is gonna be now. Let's see what this is gonna be. I like this guy over here. This presenter. There's this guy called Oz Perlman. I think that's why his name. He's a mentalist. Check this out. Oz Perlman. I think that's his name. CNBC. Check this guy out. His name is Oz. Yeah, it's blowing this guy's mind. So you got this dude. Oh yeah, that's the name. Oz Perlman. Yeah, I was correct. So man, this guy is insane. Like, if you're in a room with this guy, he can literally read your mind. Like, it's crazy the way he does it. Like, you can think of, he gives you like certain things to think about, and he finds a way to, for example, guess your ATM pin number. Like, how the hell can you guess somebody's ATM pin number? You know, he did this, like, he asked you like a few questions, but nothing that seems like obvious, right? And then he kind of like reads your body language, like the way your eyes are moving and your mannerisms and all that shit. So he's about to guess this guy's, wait, well, let's see what he guesses. Insane. It's like fucking magic. Yeah, he told him to think about somebody in his contact list and the company, right? And he wrote down OpenAI Sam Altman. This guy's fucking crazy. If he was like back in the days, he would be like a witch. You'd be like, burn him. No, the crazy one is this guy here at the end, because this guy really didn't believe him and he was trying to throw him off. This dude over here. Right? So he managed to get his company too, which was Soup, which is so random. A CEO of a soup company, Calberry's. Bro, and then it's like he asked this guy to name a random CEO of a random company, and he mentioned Lego. He mentioned Lego, and then he opened this soup can up, and those freaking Legos inside it. Like, holy. And he was a trader. He worked at a some institution as a trader. This dude right here.
I know we're on TV. This is crazy. Did you just come up with Lego for the first time ever? God's honest. I'm telling you, this is insane what's happening here.
It happens every time.
This is not like some kind of scam. I feel like...
Dude, the crazy one is the ATM though. I don't like. You should have seen him on Joe Rogan. He guessed Joe Rogan's ATM pin number, and Joe just looked like he wanted to punch him. Bruh, if someone guesses my ATM pin number, that's freaking scary. But it's crazy. He went from trading to becoming a mentalist. The Mentalist is one of my favorite TV series with Aussie actor. He's really good at reading people too. You can tell. Like, I mean, if he was a really good trader back in his days, then man, as a mentalist, understanding people, behaviors, etc., you know, kind of like makes sense. Let me download this chart over here. First, I want a 1 minute close above normal entry. Okay, and then second, wait for the bottom wick SL below this. Alright, 1-to-1 SL on BE on partials. I want to see it fly, but that candle close rest of the position at BE. Third, entry at the break of the highs of the candle that close above. So, oh, you're waiting for first a 1 minute to close above and not get in like straight. I mean, it could have saved me here. Especially if you can time it right. Maybe it's like 20 seconds on the clock. And then you can tell like, okay, you know, 20 seconds you can wait. Maybe have your extreme levels, like if it pushes too much that you get in anyway. Because this would be the ideal situation for it to just gradually close above. Give you like that bit of extra confluence. NQ had a little correction. It closed off a huge volume opening gap. Apparently the guy who made 80 million during the Bitcoin liquidation has lost it all on a log. Damn. I mean, to lose 80 million, you must already have money. Why did NQ dump yesterday despite good news on AI? Because nothing's guaranteed in the market. Oh, off topic, what about Battlefield RedSec? I'm not really into it, like, because it's kind of Fortnite-y, where you get dropped in and then it's like all about surviving till the end. I don't really like those type of games. And I don't know, like, people complaining a lot about the tanks as well, like tanks are like too OP. I just like Battlefield. Quick games. Man, I don't get how people play Fortnite still. Like, you gotta learn how to build. If you watch those guys play Fortnite, crazy. Don't even know how they do it. And I feel like it's one of those games which is, it's so hard to get into now because like everybody's kind of good. Everybody's been learning how to build since it came out. Oh. You like it though, Ryan, Raven, Redsec. Would you take a trade today if price breaks out above 40.10 and come back to retest? Kids are OP in Fortnite? Yeah, man. I was watching Speed play Fortnite last night. Apparently he's like back to usual streaming. He was doing 1v1s with people and giving them like giving them free, what do you call it? Passes, game passes, like $30 gift cards. I was thinking it would be kind of cool if we did that on stream. What if we did 1v1 trading? Like, not actually putting positions, but like just 1v1. Like, we give ourselves a time limit of, let's say, 5 minutes to find a setup and to take the setup, whether it's going to be a buy or sell. And whoever hits 1-to-1 first, you know, wins. But the other guy's got to have a mic too. You got to have a mic and you got to be... You gotta have a Discord channel. I think we have a Discord channel. Get a mic, and then 1v1. Like 1v1 arranged like this. Who can hit 1-to-1 first? Is stream live on Discord? Only for members. 100k demo best results in that session wins. Yeah, something like that. Create like a Discord channel here, just like a separate one. Somewhere down here, we call it 1v1. I give you the special tag, and with that special tag, me and you can just be in this channel right here. Just do this then. Oh, that's a leap. Paper trading competition. This is join our futures challenge. Yeah, yeah. First place, 8,500 bucks. Second place, 7,000. Oh, 26 to 50 place, 200 bucks. Still pretty good. 51st to 250th place, 6 months extension of your current view plan. Oh, nice. How do you enter? You log in your paid trading viewer account. Sign up for the competition between November 6th and 30th. Start paper trading futures when market opens on November 10th. Man, I've never traded futures before though. But I just need to learn about contracts and that stuff, I guess. Lot sizing. You'll find the full rulebook, assets list, and price details. It's nice that at least it goes up to 250th place. You know, surely you can be within this amount of people. Oh, look at this. Gold is trying to break again. All right, let's see, Goldie. Let's see. Is this a genuine break or you just like, you know, playing with people here today? I actually kind of wanted to low-key like fake back into the range. I'm not going to lie. If I don't win, nobody wins. Just one more fake out, Goldie. If you do one more fake out, come on now. One more fake out, you're getting like majority of people, even the ones who came later. Just fake them out one more time. Breaking. You see it's starting to break above these highs. Don't you dare fly. Oh no, it's gonna fly. It looks good for a rocket. It's a solid break as well. The way it approached it is a lot better than the way this one was approached right here. Damn it. Oh man. Shit. Paid them out. Let's see. Did it actually hit like 20 pips? Let's see. It's got to at least hit 20 pips. It's got to at least hit 20 pips. It hit about like 8.5 right now. It's got to at least hit 20 pips. Because that's where I'll go break even anyway. Oh, it's such a good progress too. It's progressing so nicely. That's like ideally what you want to see. Like even if it fakes out now, whatever. But like on the breakout, that's ideally kind of the progress you'd want to see. It's a little bit more progressive. Let's not move the stop loss again. Ah, there we go. Okay, okay, Goldie. Fake them out, man. Come back into the gulag. Oh, a shark in the water. Yeah, definitely a shark in here today. There's an old market wizard with long white hair right now playing the market. Market maker with long white hair. Gold is going. Let's see if the setup works. Oh, man. If it comes back here towards like 4008. Oh. Yeah, Goldie's not playing today, chat. Goldie's not playing. Told you guys, man. Look at this. Second attempt at the breakout. Holy. So this is what I want you to remember. Every time you feel like maybe you're having a hard time trading, you know, sometimes the market conditions are they're just not in your favor on that specific setup. And you got to be able to tell the difference between like a bad entry and faulty market condition. Oh, man. And it spiked like how deep? Came down like 22.9 pips. Ooh. That's tough. That's tough. That's tough. Gold is going. Let's see if the setup. Well, that's why I'm trading London like this. No, and oh, look at this. Yeah, your entry model would have saved you again. My daughter is now saying up. She's always right. Let's go. We're up to at least like 40-12. But I think that was a pretty deep pullback right here. I think if I was to take it, there's a chance that I could have been stopped out because that pulled down quite a bit. Let me see. Or would I have a bigger stop loss? 4.5. I'll probably have been stopped out. $8.6. Yeah, that was a freaking nasty wick. I'm yumming some Mexican, what is this? Mexican fajita chicken in pasta with a sparkling mango water, watching and smiling before I go back to the wage cage. Hey, WWW meal. It is going to sell back down. Man, sauces are literally everything. Mexican fajita chicken and pasta. I said sauces are everything. They make a meal just feel a lot more better, you know? Like, for example, when I'm eating like chicken and rice, most people who go to the gym would like eat chicken and rice, right? It's like a staple food. But man, getting the sauce, you gotta have a sauce. You can't just eat chicken and rice plain, you know? So you gotta make like really nice sauces. Jeez, man. Like, gold is really working on people today. Surprisingly, it didn't re-break these lows one more time. It just did a mini break on this one. There was a mini accumulation. that broke and faked out over here. But it didn't go for the major lows down back there. It's creating like higher highs. This is another higher high. That price has formed over here. It's trying to push up. It's gradually pushing up. The trend is bullish right now, guys. We're trying to move up. It's all about the herbs and spices. Oh, the seasoning stuff, yeah. I season my chicken like my meat pretty simple though. Maybe like the sauces a bit differently. But yeah, the meat simple, like salt, pepper. Can't go wrong with simple seasoning on those. Unless you're trying to do something a little bit more interesting. Is the NFP dropping today? No idea, man. I want to go one of those Texas barbecue joints where they season their steaks. You know, they make some amazing Texas barbecue. They season it nicely and then they smoke it and then you get that char, a beautiful black, whatever it is. I don't know. It just looks so nice. And then the meat just falls apart. Smoke that thing for like days. Get the right type of wood, you know, get that flavor in. USD strength is very high. Let's go and see. Currency strength meetup. Yeah, we got strong dollar today. And also gold is strong. Let's see how far up the DXY is. DXY is up 0.14%. It says it's strong, but it's not that strong. 0.14% is literally nothing. Like, look at the daily time frame. The daily candlestick it's still pretty small. So it's quite interesting. Why is the dollar index so strong over here? Why is the US dollar so strong? It's a bit of a freaky Friday if you ask me. 0.14%. And also gold is moving up at the same time. Up 0.80%. I dream of trying all Chinese dishes. China. Get some shark fin soup. Chinese restaurants actually make a lot of money. I feel like people genuinely like Chinese food. I know a lady who owns a Chinese restaurant, and in 1 month she made, let's say $90,000 in a month. But you know, you gotta also look at the margins. So maybe she pocketed from that around, I don't know what kind of margins you get for owning a restaurant. But that's a lot of money. But she's been in business for like years, you know, like more than 10 years. It always takes you like 5 to 10 years. Like if you really focus for the next 5 to 10 years on something, then you know that's typically the time frame to actually find that crazy success. Like really find yourself at the goals that you are chasing. 5 to 10 years. Just fully locked in, focusing and just getting better constantly. It doesn't have to take you a lifetime. I've seen people do it. I've seen people like actually go through that journey from a 5-year time span. Some of the people I used to follow to where they were and where they are before and where they are now. And it's always 5 to 10 years. Always, like that's the magic number. 5 to 10 years, lock it in. Lock it in, anything's possible. It doesn't have to take you, people say, you know, you're going to work in your 30s, you're going to retire in your 60s. It doesn't have to be like that, like literally. Only if you're working a salary job, because at that point it's like you're getting a certain fixed amount each month, and mathematically and everything that you put on the side as your investments, etc., insurance, blah blah blah, that will take you time. Obviously that will take you time, but if you're gonna work on something for yourself or like really find a way to add value, like a good amount of value in whatever it is that you're doing, then you're gonna like do it in like 5 to 10 years. make it through the first 6 months is hard. The first the first like 3 years. The first 3 years is always difficult for most businesses. Some dreams are best staying dreams. I've also seen so many amazing dishes here, but there are some things you would puke looking at and smelling. Or is it not being released? Yeah, it might not be released again. That's how the government shutdown is been holding back a lot of information here. Is it correct that Friday always much manipulation from in gold? Not always, but Fridays, you know, you have to be careful, especially because it's like NFP Friday. Yeah, but not always, not always. It's like when people say Mondays are my worst days, you know, it's not necessarily gonna be always the case. That's the thing about the market. Like nothing is 100% that you can say Friday's a shit or Wednesday's a shit. Because it's always rotating, you know? So your job is just to be consistent. You just come onto the chart, eliminate as much fugazi as you can, and consistently execute on a plan, stay disciplined, and just keep doing that. Even when things are feeling like, you know, difficult, you got a few speed bumps. It's normal, you know? If like markets are kind of choppy over here, yeah, I mean, like, you know, you are going to experience choppiness. You can't have a great outcome in a market which is consolidated. Like if you look at GJ, for example, if you traded GJ this year, you're probably going to struggle a lot on GJ because GJ had zero volume. So you can't like force greatness out of something that's not moving, right? You just have to stay consistent. Like, because we know gold doesn't do this for very long. It usually turns around. But you just have to like always manage your risk. Make sure during those times, you know, you're not over risking, not over trading. Because this is when it makes it so difficult for people to make back money for the rest of the month because they overtraded a shitty week, for example, right? So you just gotta like, you know, be patient. You see like right here? Imagine the amount of people who are trying to catch this breakout. You got one fake out here, another fake out here. So you're still trying to force it. And you know that it's struggling, right? Because the market is effortless. When the market moves, it moves. It's like effortless. It should be effortless. But like when it's doing this is not effortless. It's actually like struggling. It's moving up, but it's trickling. So the investor won't make money here. Only the market makers or whatever, what have you. And all I trade is gold. So, yeah, so, you know, like, we can't go and trade something else. NFP has been cancelled. Yeah. Love from India. Thank you, man. It's trying to break the highs again. Biggest lie we tell our children, it's not that simple. It's a very, very simple. Work harder than anyone else and you can achieve anything. Yes, people like to think that things should be difficult, but things shouldn't be difficult. It's a poverty mindset, I call it. Where they say, oh no, you know, it's supposed to be hard and this and that. Yeah, I mean, it's supposed to be hard, but like at the same time, that's not giving anybody advice, you know. Why don't you give some kind of a solution instead? A lot of people are good at telling you that it's going to be difficult, but they're not good at giving you solutions. Oh, look at this. It's trying to break above these highs. They're gonna reflect on you their failures, because maybe they could have tried something, it didn't work out. So instead of motivating the next person, they're just gonna say, hey man, this is gonna be hard for you, blah blah, I couldn't figure it out, da da da. But that's not a positive mindset, man. You should always have a positive mindset and say, oh, you know, I learned this from this and maybe I could have done this a bit different. But don't reflect your negativity on others just because you failed at something. All right, so this looks like the breakout. Finally, it broke out. Holy!
Why are you running? Why are you running?
Man, like catching this breakout, it has been impossible to catch this breakout. Finally, it pushed. It got out of the zone. This is what we wanted to see, but volume was delayed today. Gold was moving up today, guys. It was bullish. It was bullish. 1 fail, 2 fail, 3 finally moved up. But you know the problem is, like, even if you if you fail these two and this two and you still caught this one, you're still playing catch up now because you took like 2 losses here. Yeah, but that breakout, man, that took a while. Holy. That 15-minute clean range was looking so good too. That was the whole idea, that price could just move from here. You see, now we filled the range, that we could have just moved from here where we initially got in to resistance. You see how we just tapped that resistance? That was the goal. But you see the way the market did it? It shook everybody out. Most people would not have caught this move without some kind of a paper cut. Unless you just came in at this very moment to the chart and you decided to take a buy here. Do you pay attention to order blocks and all? Like the OB, it's in the right now. No. I gotta focus on like one perspective, because you know in the market when you try and focus on everything, you're never gonna be right. Because someone else could say, oh, but you know, there was a OB over here and I took my fair value gap entry and my stop loss was here anyway. I've just been sitting in the trade the whole time. You're never gonna be right if you're considering like everybody's entries, because yeah, maybe somebody drew an FVG somewhere around here and then took it right there for whatever reason. So you gotta like stick to one theory and that's it. Because if you don't, you're just gonna be on a hamster wheel all the time. So for me, the way I look at markets, for me, this was something that you could not have caught properly. Because, you know, the London Open is when a lot more people are going to be looking for volume. And this was the London Open breakout. So you'd have more market participants here looking for continuation here. So most people would have been faked out either here or here before that move actually happened. You know, I try to think of it as objective as possible, without like including any overcomplicated strategies. Like you can even say a Fibonacci retracement, maybe it was here and that was like golden zone that played out, without including any of that stuff. Because at that point it's like, what are we doing here? You know, it's like when you're talking to somebody and you're trying to give them advice, but they're not moving the conversation forward. They're just keeping it in one place. So, you know, like what's the point? Are you in a trade? No, I'm not in a trade. No trade for me. Because now, at least a good thing it's moved. So since it's moved from this region, it can set something up again somewhere else. You know, maybe it's going to set it up here and then like retrace down and start setting something up again. At least it's moving out of this place, because that's where the manipulation was. So getting maybe hopefully the shark out the water now. And we can get some clean PA. Like this morning's price action was so clean. You see how clean that break was? Oh, okay, so what happened here? We actually had one break before. It broke, but it pulled back once. Oh, okay, I see it. Dun, dun, dun. But this is cleaner because... No, I think... No, this is valid. I think you would have wanted... Wait, Dune? Ah, there's another setup right here. That pushed about 18 pips. Then it retraced back into entries. And then it had the continuation. Alright. Yeah, no, that's fine. That's fine. That was a lot more cleaner. Can you check trades taken, please? Since I saw watching your trading masterclass. This been so good, man, I swear. Alright, let's see. Make sure you guys watch that playlist. Lots of gems in there. That entry is a bit high. Entry is not high, my friend. Entry is only high because you think it's high. You've made it up that you think that his entry is high, but who says it's high? Who says it's high? Price has just pushed up an additional from that area of 40 pips. No one says it's high, but what you think it is high. Well, the market doesn't know that's high. Market doesn't know it's high. We're up right now 0.87% right now. We've been seeing gold do like 2% in a day. You know, we're not even at 1% yet. Why don't you enter at 50% pullback to reduce SL? Because gold will not give you the pullback. You know, gold, man, like when gold moves, it's supposed to move. You see, like here, once it starts to move, it's supposed to move. So if you're going to wait for a pullback, then most times it can go without you. The same thing as like if you think that price is going to come down first and then go up, you find most of the time you'll find yourself in situations where you're just going to be left behind. Price never will pull back down there. And by the time it's pulling back down there, it might already be switching direction too. You want it to stay up. If you want to buy, you want it to be moving bullish. You don't want it to be moving bearish, correct? Like, why would you want price to come down? It's because you think it's too high to buy, so you'd rather have it come down to go up. But you see, that's also counterintuitive, right? Counterintuitive because price is moving down. And then you're buying as it's moving down. Whereas it's better to buy when it's moving up. Like, imagine a trending market condition. That means in trending markets, you can't catch moves because you never really get what you want to see. Because price just keeps moving up. See, like yesterday, this was yesterday's trade. If you were waiting for a pullback, price would have left you behind and it went up. You know, and by the time it's actually pulling back down, it's not safe in my opinion. But I think like in trading, everybody has their own sort of like, you know, perspective. So I respect that. Am I allowed to say platform names in Discord? Sure. I think accumulated, manipulated up, then distribute down. Accumulate, manipulate up, then distribute down. All right. It should start back down soon unless there's a candle close above 40.16. Let's see, 40.16. Let's go on the 15. Oh, 40.16 by resistance. Oh man, yeah, we're coming up towards that 4-hour resistance point. Here, this is what we want to break above. Look at the wicks, man. Look at the way gold has been wicking so much here. Look at all these wicks. It's like a minefield. We needed to clean up again. Yeah, like this kind of PA looks so much nicer. There's always going to be wicks, but it's like, it just somehow with the candlestick bodies and how they're closing, it just seems a lot more less confused than when you got this. But I think Goldie will be able to break out soon. That's the thing about gold. It's always gonna be the number one because it's a perfect what's it called? It like a tier 1 asset, gold. So it's always gonna be number one. I never see gold doing something like, you know, what we saw with GJ this year. Chopping up. Because every year, there's always needing to be something. There needs to be some kind of a drama. There needs to be something happening. So also the super rich people, they can keep making money, right? Because how are they going to make money if there's nothing happening? That's why every now and then you're going to see Trump like say something crazy. Because we need that volatility. And you know, gold is like in line with that volatility. So it's always going to be good. You could comb your hair with those wicks and I'm bald. Struggling with it. You know, the thing about Goldie right now, it's not at a high volume time. So you could expect some more choppiness even after that distribution, that little distribution of there. Very small distribution, very difficult distribution to catch. But it looks like it might range up until like New York session open. But you see, no NFP today. We don't even have NFP on the calendar. So it's not even ranging for the NFP. I think it's just ranging just because of the whole context of where price is fundamentally and technically. So it really freaking needs some volume inside, you know, so we can just boost ourselves out of this gulag. NFP today? No. It doesn't seem like we're having NFP. NFP has now become like GTA 6. Now GTA 6 has now been postponed to November. Insane. I'm gonna be in my 40s by the time that game comes out. I'm gonna be bold. I'm gonna be bold like Woods when GTA comes out. I already got my channel here. You know, just been waiting here. Got the Discord server, Discord channel ready for voice chat. Then it gets postponed. Man, I think that 3i Atlas thing is gonna hit the earth before GTA comes out at this rate. That space rock, that thing in space. Loading up GTA. Look out the window, you see a nuclear bomb. Right when it says Rockstar Games and the music comes on, and you just see a bright white flash. Or you finally become profitable. Man, imagine that happens. You finally get your payout. You finally get funded. You know? I mean, not your payout. You finally get funded. You submit your payout of $5,000. And then that happens. Happy to share the journal with you. Haven't finished it. You can send it over. Creating a new journal, so I'm using an old unused account that had 319 left in it. I've been achieving great results with tiny lots. Check out the growth. I put extra cash in today. I was on to get it over 100k from 2,500 with the strat. Oh, it looks pretty clean. Total trades, holy. That's a lot of journaling though, huh? You gotta like fill everything out here. Oh, how does that work? Is it automated? Starting balance deposit. Break of structure liquidity grab. It's a really nice journal though. Yeah, when you're gonna journal like this, you really have to. Man, but you take so many trades. 1, 2, 3, 4, 5, 6, 7, 8. You take so many trades, man. This is like so much work. But if you're taking like 1 or 2 trades a day, you get really detailed with your journal. I think it's a lot easier to journal. Most people struggle with just even journaling 1 trade. So if you're gonna like reduce the amount of trades you take, you're gonna have more data, more insight, psychologically wise, how you really felt about the trade. You can really study it and just focus a lot of that energy on your moves. But if you start taking like 3 trades, you're gonna stop journaling. You're eventually gonna stop. 3+ trades. How do I manage slippage when I put a buy or sell order? Sometimes slips happen, and it's just part of the game. I try not to be too perfectionist about my entries. All I need to do is just get stuck in. But you know, you always got to manage your risk. So if you got a really big lot size, then it affects you more. Man, looks like gold's coming back into the gulag here. 1 win, 1 loss. Have taken 2 buys. Nice. Created us like some resistance here. You say it's struggling. It's trying to push up, but you see, you can feel it, right, guys? You can feel like today is not the cleanest. It's not the cleanest London session. And you gotta trust that gut sometimes. That gut is very, very true. Even for traders who've been trading like for, let's say, at least 6 months, that gut feeling, it's always somewhat true, you know? So if you know it's not the day to be over trading, then don't do it. Oh, nice little breakout though. That was a clean sell. There's a counter trend move, but it was a nice sell off here from this region. Then I'm making like 10 euros average every day with a 500 account. Is that good? Man, that's amazing. Gold or real estate in 2025? What should Indian investors choose? Gold or real estate? Do very different jobs in a portfolio. Gold is quick to buy and sell, helps during market shocks and adds stability. Real estate can create long-term wealth through a mix of rent and price appreciation, but it needs time, effort, and paperwork. Knowing what you want, liquidity or long-term ownership, makes the choice easier. Gold in 2025, the simple case. Gold works well as a safety net. It does not depend on any company or borrower, so it holds up when the markets are stressed. It's easy to buy in small amounts and just as easy to sell. For most people, a modest slice of gold helps steady overall returns without taking an extra complexity. The best ways to hold gold. Sovereign gold bonds. Avoid storage issues and can be tax efficient at maturity. Sovereign gold bonds are, however, only available on the secondary market now, as the Reserve Bank of India is not issuing any new ones. Gold ETFs give you daily liquidity in a demand account. High purity coins and bars are fine if you can store them safely. Yeah, you gotta pay insurance. Jewelry is not ideal for investing because making charges and buyback cuts reduce what you get back. What to watch out for gold? Gold does not pay income. Your return depends on only price movement. If you hold too much gold, your long-term growth can lag other assets. Physical gold needs storage and insurance. ETFs charge a small annual fee. And sovereign... What is this? Sovereign gold bonds lock money for years with limited early exit windows. Real estate. Let's see. Property can give you two sources of return. Rent today and price gains over time. It's good fit if you can hold for 7 to 10 years. Prefer a tangible asset and are comfortable handling upkeep. With a sensible loan and a steady tenant, part of your EMI can be covered by rent while your equity in the home grows. How to pick the right property. Location drives returns. Focus on areas with jobs, transport links, and good social infrastructure. Choose developers with clean titles and a record of on-time delivery. Add up to full cost stamp duty, registration, GST where applicable, brokerage, and interiors before you compare it with expected rent. Okay. And that's actually a pretty good article over here. A simple sequence that works. Alright, so let's see. Build your emergency fund and insurance first. Add a small gold allocation to steady the portfolio. When income and savings are stable, shortlist a few micro markets, track prices, and buy only when the numbers make sense. After purchase, review rent costs and loan terms once a year, and keep your gold share within your target band. Gold is your liquidity safety cushion. Real estate is your long-term ownership play. Damn, what a dump. This was a... How many pip was this? 52 pips. 52 pip dump. Maybe it's back to playing the range, so it'll create some kind of a support here, like it did previously. Boom, boom, boom. And then try to move back up again. Goldie's not doing anything. Then you got like this big liquidity grab here. Just got the move down from the top. Nice one, Asian boys. Asian boys, UKs. And I really wanted this breakout here. Like, it was such a clean breakout. I think it was like also because it was so obvious. It also gave maybe chances for fake outs. So you got 1, 2. 2 whips before the push. Let's see what's new, what's new, what's new. The leap challenge. NFP today? Come on, man. Just open your eyes. Go in Forex Factory and you're going to see here there's no NFP. If there was NFP, it would have been here. It would have been scheduled. You see this? US government data may be impacted by the shutdown. The only thing you got is prelim consumer sentiment. 2 hours into New York. Orange folder. Trump spoke yesterday. We had Trump speak. I think that happened. Sometimes that gets populated later. We didn't see that when we were on stream. So orange folder. Is that why gold reflipped? Why did gold reflip? Let's go kill zones. I was like a New York session time. Got like a nice little head and shoulders accumulation breakout. Alright, over here. Dun accumulation. And then started breaking the lows and completely melted. That happened like around 9:15. But Trump was speaking at 10. Okay, so no. Wait, let's go back. 11 a.m. So that would have come in here. Markets chopped for a bit, then faked out, moved up. It doesn't look like he did anything too crazy. But that was a pretty big spike here, like 100 pips. Or like 127. It's a little accumulation payout. See from this area. Then started breaking the lows and then it distributed. But it did not break the highs. So there was no liquidity grabs. It just broke the lows and then followed through. Then did like a V-shaped reversal, taking out any sellers who are still holding. Yeah, Trump's speech did nothing. I'm doing badly today. I fell in all the traps. Well, there's a lesson to learn there. You mustn't end the day just like that. You know, the worst way you're going to end the day is just to say that and then just leave it like that. But you're going to take a loss, or you're going to fall in all the traps and you're going to be like, okay, you know, it is what it is. Just look and see, how could you have avoided those extra traps? You see, it's a reason why today I didn't take a second trade over here. You know, because I tried my first trade. My first trade didn't work out. So I avoided the second trade because I was also in a situation where I was falling for these traps. So I had to look at my days and think of like, what could I have done differently next time? And you know, like, that's how you learn. And that's why this time I didn't fall for the second trap. You know? But if you don't do that, then it's gonna unfortunately happen to you again. That's just the way the market operates. If you got a bad habit, it's gonna need to iron that habit out of you. It's gonna need to build your character. So until you actually build that character, you're still gonna have those creases. So the market can iron it out for you. I did the same thing multiple times. 4K coming. Not too far off 4K right now. We have about 59, 60 pips to 4K. Get a really good dump here. If it dumps. Yesterday's candle was bullish and then it reflipped bearish. So, you know, maybe, I mean, that would be crazy to see happen again. Because this is how, technically speaking, this is how yesterday's candlestick also looked. It also looked bullish, and you know, we thought maybe we're just going to keep moving up. We're going to close bullish, and then look how it closed. So this could still, and it's even pushed up higher yesterday. It could still reflip and close bearish, which is wild. That means volume would have to push this thing around a 330 pips to the downside. But it's definitely a slow London, to be honest. Like you can see here with the kill zones, like since London session opened, been pretty slow, right? It hasn't had much direction to anywhere. So it's just been hovering. So it's a like very difficult market condition. So it's not fun. It's not fun to trade, but it's opening up at least here. So, you know, like when we had this push down, it's creating a range here. I think it's in a distribution to the upside. It's trying to break. Yeah, it's got a little inverted head and shoulders there. It's trying to break. Like these are like, man, it's like these are the safest moves at this point because the breakouts are faking out so much. You're just better off like within the ranges. Just playing within the ranges. Just like this one was right over here. How that shot up within the range. Then it came to the highs. Faked out. Boom. Came down here. Faked out these lows to move up again. This is the range break right here. And then another sell into the range. Back into the gulag. Right over here. Boom. Back at the lows where you had these previous moves. Buying pressure. Back over here. That's where you are currently, you see. It's like safer to play the range because price ain't going anywhere. It's got nice clean traffic over there too. But you know, this is only obvious in hindsight because if you're planning on trading, let's say during this time before that London Open, like you obviously would not know that price is gonna range, correct? Because it still looks like it had like nice little bullish momentum, and it could just like any other day, just like this day over here, keep pushing up. You know, we had a bullish extension, London session open, and then it kept moving up. Similar situation here today. Pre-London, you had an extension, consolidated for a bit, could have just kept moving up. Then you see in hindsight, it's like, hindsight is 50-50. Boom. Look at that, 24 pips of that inverted SMA confluence, break of the highs. Very nice. Only difference between the losing probability of this trade and this trade is just simply this is within the structure, the market conditions. So it's a higher probability that those would play out. And there's no room for many fake outs within that area there. Can you explain what the kill zones are? Yeah, the kill zones are just this indicator by Oscar VS, where it just basically shows you the market sessions. You see, like when it's blue, that means London Open, right? So you can change the colors how you want. So it just helps you see the market a bit better, easier. So you see like right here, this is black. So that's Asia, London Open, blue, red is New York Open, and then London close here. It fades out. The blue fades out. And then all the way till New York session close, and then it starts again. If you guys want to see, that's my current settings. I just got NY, London. Then, you know, you can put whatever color you want. But it's quite nice because, I don't know, it just gives you a sense of the market without having to look at the time. Can you explain fair value gaps? No, I'm not an encyclopedia for trading. I can't explain you things that I don't use. We only trade TFX concepts. Lucky you got 101. Grab a quick buy. It was nice, man. Like it had the inverted here. Inverted and a fake out too. It's basically the same thing that happened right here, but this one didn't have the inverted. This one was just like a consolidation break fakey to the upside. Just like an inverted head and shoulders with a fake out. and then broke the highs to move up. This broke the highs to also move up. It just did the same thing. So if you felt like you missed this move, then you know you could have caught that move. You don't really ever miss a move. Asking to come back. Why do I prefer SMAs rather than EMAs? Oh, besides they're a bit less lagging. I used to trade the EMAs, but that's just simply it. It's just because they're a bit like the simple moving average is not as close to the price action. The EMAs are a bit too tight for me. You know, I like that additional lag. That additional lag gives me clarity. It gives me more conviction. Because if it's too precise, then you get a lot of false signals, right? So yeah, the lag is perfect. You see, like right here, like how price shot up, respected, and then the moment it closes SMA, you get a bit more conviction. Or like if it breaks above it, you get a bit more conviction about certain direction and plays. See, it closes again below it, you get a bit more conviction that it's coming down. So it's nice to have this confluence. Like even if you look at the sell idea here, this is that nice little sell accumulation breakout. Maybe you could use stop loss here, even though you use a 16 pip stop loss. And then you're looking at your SMAs and you're like, oh man, kiss of death right there. Boom. Look at that. You got the kiss of death, gives you conviction where volume is supposed to be coming in. You see that? Then it gives you nice, even close below that 50. See how it closed that 50? It's like the perfect lag, you know, for my strategy and trading style. And then let's see, it starts to close above it. You see what happens here? Like now it's starting to switch direction. Close above it, respecting it, holding it, boom, boom. Simple. Why don't you use MACD then? Same reason I don't use POC. Same reason I don't use ghost feed and bar patterns and anchored VWAP and all this other stuff. Because the idea is like, how can you use less? It's not about how can you use more. You know, people want to use more because it feels like they're doing something. It feels like more professional if you got all this softwares and all these indicators. But my trading is how can I do damage with as less things that I need. Because I don't like to rely on moving parts. I'm a naturally aspirated engine. I'm not a turbo engine, which is most likely to give you problems. I'm reliable, I'm stable, I get you where you need to go. You know, when you're these other engines, then you know there's a lot more moving pieces which can fuck you up. It can be very expensive as well. If you're going on a journey, because if you're going on a road trip, are you gonna go on a road trip with a Ferrari? Or are you gonna go on a road trip with some kind of a more reliable vehicle? You know, why would you feel more comfortable in, more confident in? Because trading is a journey. It's a marathon. It's not a sprint. You know, and you want to get to your destination safe and sound without as many problems as possible. So you're not gonna pick the Ferrari. You're gonna pick something else that's more reliable, correct? And that's why I don't use a lot of things in my trading. That's why I try to keep my life as minimalistic as possible. Because in minimalism, you find a lot more clarity. You can achieve more things. Think a lot better. Have less distractions. And it's the most efficient way to do things. Are you trade prop account or personal? Personal. You know, people who own this nice cars and everything, man, like if you look at their life, you know, if something happens to your car and you gotta service your car and all that stuff, like it's quite expensive. Of course, if you have money, you can afford it, who cares? But it just adds an additional complexity to your life. That now you gotta service it, you gotta meet up with a mechanic, you gotta do this, you gotta do that. And it's like, why do that in the first place? Instead of buying a super expensive sports car, why don't you just buy something that's more valuable, that gives you more value? Less headache. That's like just an example. Because man, like indicators used to give me a lot of headache because I would have a buy position and my indicator would tell me something was here. Maybe it's like a point of control. right? Because I used to use POC as well. It's like point of control, and then all of a sudden I miss taking my buy, and then it does this, and I'm like, fuck. So now an indicator has made me miss a winning trade. An indicator. I'm a human being made from the ashes of stars, and a stupid indicator made me miss my trade. I have a brain. We're all created from fallen stars. And a bloody indicator stopped you from your own decision making. That's a weak mindset. Come on now. If you whip, I say God already gave you everything you need. You don't need anything else. Without us, the market wouldn't exist. This candlesticks would not exist. What came first, the indicator or the human? Kind of funny, Chow. Why do all, like, most of the Wall Street guys all have the same kind of market wizardy hairstyles? Like long white hair. Market wizards. Anyone who gets a Mercedes is gay. They're stressed out. Technically, the indicator already existed. The human just translated it into terms we understand. Please, what is the results of 2 positions you have taken today? 1 win, 1 loss. You can see it on the chart right here, on the stream. It's too much stress with a personal account. I can't do it anymore. Well, you got to control that, because if you can't trade a personal account, how can you it's like saying you can't trust yourself with a bank account. Man, I got all this money in my bank account. I can't trust myself. I'm going to spend this money. You know, that means you got a bigger problem. You got a bigger problem than just, you know, what you're dealing with. Because the market's going to expose your weaknesses. It's not only going to be in trading, but it's also going to be in other areas in your life. So at least you know the challenge you got to deal with now, which is learning to trade a personal account, you know? I mean, if you're not profitable on even a $100, $500 account, you can't be profitable trading anybody else's money on a funded account either. It's trying to do the same setup here again. Little inversion, inverted head and shoulders, little accumulation. Might try the break above these highs by 4,007. Let's see. Came back to the same spot. It's kind of funny. Came back to the same spot and it's done like kind of a similar thing here. See if you get the continuation. If it breaks, like a solid break. Yeah, this is a like pretty nice break over there. Let's come back to also retest this area. Retest the previous sellers. I mean previous buyers up here. I think I saw an interview once of this market maker guy talking about how when price moves, like if you get buyers move the market, they only move it for a short time, and that's why we get these pullbacks, because it's coming back to see if there's more buyers here, which is something I already thought, but apparently this guy worked at a, he was a market maker, so that's what he was saying. Like that's what happens. Like if you move the market, you can move it, but then it'll always come back. It'll like recalibrate. If there's not enough buyers to keep pushing it up, then you'll move it, but it will come back. It will come back and keep looking for people to buy. And then maybe even the same person buys it again. The same person, because he wants it to move up, he can buy it again, and then it moves up again. And then he tries to get more people to buy. But if no people are not buying, it can come back down. And the same guy can buy it again. And that's why he keeps doing that. Like the market will always recalibrate. If you notice, like it typically would come back and retest areas like that. I always thought that, but this guy's a self-proclaimed. He's not self-proclaimed, but like he is a market maker. Like that's a job on Wall Street, and he explained it like that. I'm like, okay, it's quite interesting. So maybe the move is not done yet. They try to get the same buyers or more buyers to come in here. That's why sells always move more than clean than buys. Yeah, could be. Hey bro, what's up Vishu? These days you don't reply? I don't see your messages, sir. I see all the messages. I never see your messages here. Gold rises on US rate cut hopes. Nice little fundamental that just came out again 1 minute ago. In line with a potential break above wicks to move up. Did you win today? I'm not trading today because of the Supreme Court decision coming on Trump tariff. Too uncertain for you? Yeah, I gave it a shot today, and still gonna end the day with like 1%. Can I see your SMA settings? Yeah, it's like 50 and 8. You can like better download them in the description box. It's a much easier thing to do. Bruce Wayne type of portfolio. Question is, who's the buyer that's moving the price of gold? Yeah, I mean, like that's what the interviewer asked him, and he said it could be also just one person, one person like trying to push price. But of course, like retail traders, we don't have the capacity to do that. I don't think we do. How much money is it to move market 10 pips of gold yourself? Hundreds of millions probably. Tens of millions. Tens of millions to hundreds. But it also kind of depends, it's a technical question, because what about the sellers here? So your money is also going up against their money. So if you got like a lot of selling pressure there, maybe it's going to cost you even more to make that move happen. So it wouldn't be easy for it to go up because you got that pressure. But if there's not a lot of sellers there, it could cost you less. or if you got momentum on your back. Remember, like if it's an ocean and the ocean is offshore and you're swimming out, then if you're swimming out and there's buyers participating, it could cost you less because you're going with the flow of where the orders are too. So it might not need as much. So I think that's when the access to information becomes more crucial for you as a type of a market maker or that sort of trader. Then you need those platforms to see or gauge what kind of liquidity it is that's sitting there. I mean, I kind of do it like already with a strategy. Like whenever I have my entries, I'm kind of gauging that there's less resistance there just based off of price action. That's why we get these really nice follow throughs like this. Typically, we just go through it like butter. But I guess to be on the safe side when you're handling loads and loads of money, like you definitely, those guys are playing at a whole different ball game. Whole different ball game. But I still think the concepts remain true of when you do see price do a certain thing over and over again, you know, that's all you need to know anyway as retail trader, is that you're going to have a higher probability of one thing happening over the other. Because you know. Like Jesse Livermore moving sugar to save himself. Bet that will feel good though. Placing an order and it just pushes it. No volatility until you order. Yep. We dump this thing to like 4,000, eh? But it's a big risk, you know. If you take a big risk and you push it somewhere and then it starts to go against you, you kind of like trap yourself. So for me, it's always been the path of least resistance. When I also think about the way they do their work and the way I see price move, you're always trying to see like, what's the path of least resistance? You know, and market loves a path of least resistance. It's more efficient, it's less costly. So always looking to see, okay, you know, like if I want price to move up here, how can we make that happen in the most efficient way possible that we don't waste money? You know, because you can't just be given like the tools like a kid in a candy store and you say, oh, I want to get it up there. Then you buy and you get it up there, but you haven't achieved anything. Because maybe it comes back down, maybe it starts to cost you a lot of money, maybe there's a lot more slippage, because as you're getting in, maybe you're triggering orders, which means you're not getting filled at the orders that you want, creating slippage, hence you lose money. So there's a very complex way when it comes to understanding liquidity in the market. It's not going to be as simple as just using an ordinary indicator and assuming that you're going to pay for volume profile or software and think that you're going to know everything, because there's a big blob here that tells you there's an amount of orders there. You know, now you're putting yourself in a very dangerous environment. Now you're trying to sit with the sharks. You know, you're going to be like a little fish and you're going to try and sit with the sharks. And the sharks are going to be like the mafia. They're going to say, who's this kid? You know, who's this kid? Because these guys have so much experience. They've been here way longer than you. Like, you were not born. These companies already existed. You know, so you're like the little guy and you're trying to like trying to sit with the sharks like that. I don't think it's going to play out too well. You know, overcomplicates it, because you can't have access to that amount of knowledge unless you actually decide, hey, one day, let me go and actually go there and get some interviews with people, truly try and understand it. If you're never going to be able to work at an institution, for example, you might as well start liaising with people who actually do that and start watching YouTube videos. Because now at this point, you're really trying to bite a lot, and you're not going to be able to do that off the comfort of your own home, Googling and YouTubing these like interviews. You're not going to get your answers. You might as well just fucking go there. That's why you got to stay on your lane. That's why I stay on my lane. Like if I see moves happen and there's a consistent pattern of that move playing out in this consistent way, if I sample size 200, 400 trades, then that's all I need to know to decide whether I'm going to cut my risk when price starts to go against me, or you know, we're going to take the position, we're going to take the entry so price can go in our favor. And you see, that saved me here today so much money, because I was risking 1% and I only lost 0.44% on these buys. And that's all I need to know. All I need to know is, how does it look when it plays out? How does it look like when it doesn't play out? And which ones look the most like they're going to play out, and which one looks the most like they're not going to play out? And at what time do they have like higher probabilities of playing out? And then try build a system where you can actually be consistent. Because if you have a lot of what ifs, what if this, what if that, man, like trading then becomes like you're operating in a level that you truly don't understand. So I would say for you, any system that you use, if it's FVGs or any softwares that you use, at least truly understand what that thing is. Like the ins and outs of it. Where is it coming from? Where is that data being derived from? Don't just put an indicator and say, oh, that's a point of control, for example, without fully understanding how that indicator works. Because like for me, in my first year of trading, I never used to do that. I just used to put on indicators. I gave two shits what they meant. You know, if there was an indicator here showing me volume like this, I'd be like, okay, it's showing like a big candle, so maybe there's a lot of volume here being built up. But you see, you don't know where that's coming from really and truly. So you got to go down the rabbit hole. And man, if the rabbit hole is too deep for you, then don't go down that rabbit hole. Because yeah, some of you smart money concept guys, you're going really deep down a rabbit hole that even we don't understand, you know. Very speculative. I'll have them sharks moving like Sebastian in the whale washing dolphin. Yeah, that's one thing in trading. You gotta remove as much speculation as possible. There's no room for speculating about boogeyman and all of this stuff. Like, just trade what you see, not what you feel. If you see price moving up, how can you be part of that move up? You know, stop asking what if questions. What if price reverses here? What if it doesn't keep moving up? Only indicator I use sessions for, so I can see when we enter London, New York. Yeah, like simple things like that. You know, it's like simple. All right, kill zones. It shows you when London session opens. No speculation there. It shows you when New York session opens. Simple. Simple moving averages as well. Nice little tool to use. Moving averages you're going to see widely used across the industry. And it's just a way of just gauging certain behavior from the market in confluence with your entry models. Because you see it do a certain thing. Like, for example, when you get the SMA crossover, I typically see volume come in. You see, like right here, it crossed to 50, then volume comes in. So it's like, okay, you know, cool. You see this? SMA crossover here, volume comes in with the entry confirmation of the accumulation breakout. So I'm like, all right, cool. Like, this indicator I can use because, you know, I understand the way it works with my entries on price action, and I like to see them on the chart because we do have reactions off of them, right? But it's not complicated. It's just a simple moving average. And then you see the TetraFX bias over here. Pretty simple. If the daily candlestick is bullish, that means there's more of a chance that the buyers are in control. You know, like right now, if you look at this candle on the daily without saying what if this, what if that, what about this sell over here on 27th of October, what about that sell in 21st of October, like you see, it removes all this analysis paralysis you're gonna have from previous price action and help you focus on who is in charge today. You know, because like if price is moving up, it's moving up. So you're looking at who is in charge. A lot of you are trying to catch like 20 pips, 30 pips. Man, gold moves crazy nowadays. You can easily catch like 40 pips, 50 pips. If that's all you're trying to catch, just look at the daily and see who's in charge today. You know, are you going to have a higher chance to catch a buy trade, or are you going to have a higher chance to catch a sell trade? You know, and what time is it that you're taking a position? Because right now, if we're being as objective as possible, the buyers are in charge. Since the London session here opened, where has that graph gone from this point to this point? Which direction is it going? As much as you wanted to sell, as much as you feel like, okay, the fair value gap here from price action from before, and it's hitting into this zone now that you think this is going to reverse down, It's fine. If it happens, awesome. But you know, I'm trying to remove that speculation and just see where are we heading right now. Ideally, most of the time. And just stick with that flow of price. But you see, there are other times where you can counter trend moves as well. And that will also take a bit of like more experience, because you just have to see like how price comes to those certain levels, right? How does it approach those certain levels? Where is it failing at? Then you can also get some hints of maybe we're going to get some possible counter trend moves. But I would say like for a beginner trader who's still not good at impulsive entries, just focus on this. Get the TFX indicator here, have it on your chart at all times, and just know when it says bullish, you can be a bit more safe for the buys. When it says bearish, for the sells. When it says waiting, it means the market is not ready yet. Like it's the daily is consolidating like this. You see, like it says waiting. You don't have either buyers or sellers in control of the DXY right now. This thing could easily flip. Also keep in mind the time that you're trading, because like sometimes as we head into like pre-New York and New York Open, you can see start to have like a rollover, just like we had yesterday. You can see gold start rolling over, usually during that time. So I think it works beautifully during like the Asia pre-London into the London Open. But as you're heading into New York, you can expect some kind of like sometimes a change of direction. So I can quickly flip. Then you start to say, okay, you know, maybe a counter trend here could make sense because of the time that I'm trading. And then you start to naturally build those impulsive instincts to know when to counter trend. But until then, you gotta like stay with the trend. Down for the day. Peace out. See you later, man. Asia boys. The fair value gap has existed since 1976 and has called imbalance zones. ITC is just a different name for what already existed. Dump incoming. I will be looking for sells today. Ichimoku cloud. We need some Ichimoku clouds in here. Or is this locked? Invite only. EMA and Ichimoku. Oh, wow. Look at this. Holy. My frame rates just dropped from like 60 FPS to 25 for 30 right now. So much data here. It's sucking all the information from the market. Holy, look at this. My trading view is lagging here. Need a quantum computer to figure this one out. Well, what is it saying? Oh, look at these lines here. There's a lot of pressure above this candle. It needs to get through this green line. This other yellow line. How much is my indicator? It's free. It's free. It's in the description box. Wow, look at that. Oh, that feels so much better. Feel a lot more lighter now. Oh, nice. It's a minimalism. $4K, $4K, $4K. You're looking for sells today? Gotta get through this level here for sells. So if we can get through like support, we can see price come down to like 4K. It's about like 21 pip range to the 5-minute support, but we need to get through this level. It will be forming like a head and shoulders there too. Got left shoulder, head, right shoulder. But you see it's struggling. Every time it comes to the bottom of the range, it starts to shoot up again. What indicator did you say? Please to show buy, sell, and indecision. It's a free daily bias indicator. It's just in the description box. Sellers fake out. Yeah, it's a small little fakey here. It broke below the slows. These wicks are pulling back up. It's a toughie, man. It's a tough week. So if you get to like end this week somehow decently, then I think it's like showing good things to come. You know, if you manage to end profitably or break even or a slight bit of loss, then I think that's what you're kind of aiming for. Because you're trading the trenches, right? You're not trading, this week you've not experienced trending market conditions necessarily. Since, you see this is Monday. This is Monday right over here. See how Monday came, created resistance, and it just came down to fill this range to support. And then we just bounced off support to come back to fill the range back to resistance. So we haven't gone anywhere since Monday. We're just back here by Monday open. Like literally. By the Monday open right now. And it's Freaky Friday. Freaky Friday. Today. So don't overtrade. Where's my Freaky Friday banner? Oh, there it is. End of the week at break even. Old me would be blowing my account by now. So let's go. Congratulations. Am I looking for confirmation before taking a move or just watching the chart? Yeah, right now, like gold is not doing anything interesting. I already took like 2 trades today, so I think I'm done for the day. Just watching the chart. Just had like a fake out. We just had a fake out right here, V-shaped reversal. And it's trying to come back to the top of the range. But without any entry confirmation, it's just a V-shaped reversal. There's only a sell confirmation right here, down again to the bottom of the range once it broke those lows. But yep. What can you do? You know, what are you gonna do? Because you're gonna look at price and you're gonna be here for, let's say, the next 3 hours, and you might just find yourself in the next 3 hours just playing a range like this. So I think the best thing is to wait for gold to move, like wait for it to break out or at least create something a bit more appetizing. You can see it's already trying to break from this area here. We were previously accumulating heavy there, and then it started getting in some volume in again. You see with these little extensions here, it's trying to like spread out a bit more. So we might even stay in this range, but we could end up spreading out a little bit more, a bit more predictive as well. If we don't get the continuation, because we're at like 4-hour resistance. It's a lot of heavy lifting here for price to start breaking above 4-hour resistance points. at like 33 minutes as well. Sometimes you're just waiting for the 4-hour candle to close. So I'll wait like 33 minutes. Maybe this is going to close like a doji. Saying still bullish until breaks the cloud. Till it skyrockets. Happy Friday, Joshua. Thank you, Abigail, for the membership. Let's go. Please, how can I add the indicator on TradingView? Just add it on favorites. Just click on, I think it's top right. Click on the link, top right. It says add to favorites. November. Dun, dun, dun. This reminds me of another month here. September. Ooh, September was crazy. And look at September here. September started with so many speed bumps, but it still ended off like 35%. But so many speed bumps in September in the beginning. Then it started opening up later. You know, that's the power of trusting your plan. Because just like many things in life, in the beginning, you might seem like it's not working out for you, but you always got to trust your vision, right? You got to trust your vision and just keep pushing in that general direction. Because then eventually you don't know what's on the other side if you give up. Right? If you give up here, because this is a problem with a lot of people learning to trade for the first time. They're going to backtest a strategy like this much and then use those results to anticipate maybe what's to come. But you need at least according to Mark Douglas, 25 trades to give you an idea of what to expect from your system. Right? 25 trades. But for me, I personally think a bit more than that would be better. Like at least trade a system for a couple of months. You know, because some months might actually just be trash. You might just have a trash month. Doesn't mean the system is all good. But you don't want a strategy hop too often. Yeah, I think September was the month with a lot of speed bumps in the beginning. And then it opened up. These are the best months though. Like May, really nice. Like gradual wins, break even, win, win, win. Loss, break even. This is insane, man. Look at this 10 win streak in May. And June, kind of like speed bumpy over here. Had a hat trick. Hat trick, 1 win. Man, if it wasn't for this win, I would have had 3, 4, 5 losses in a row. If it wasn't for these 2 wins, I would have had 1, 2, 3, 4, 5, 6 back-to-back losses. Holy. And these are small win, man. This is like 0.50%. This is like, okay, this is like almost 2%. That was a small win over here. Almost had 6 back-to-back in June. Yeah, I think you just gotta stick with it. Under backtest minimum, super easy to come by, then as much forward testing as you can. Yes. Do I use funded accounts or are you mainly trading a live portfolio? Live. Yeah, just a live account. I think you gotta like get off of funded as soon as possible. It's just good to start the live account, but you don't want to stick with funded. A lot of people like the idea of combines and having multiple funded accounts, but if you look at anybody mature in the industry, they're already making money they don't need supplementation. You get to a point in your trading career where you don't need that supplementation because you already have a skill that can give you exponential growth, and you don't want to waste your time on a funded program when you could be growing your own personal account like without any sort of worry about payouts and etc. rules and what have you. That's what, at least that's what I think, because I'm cut from an old cloth. And like a lot of people nowadays, you know, this whole funded thing is more of like a hype. Funded accounts, like, sure, they've existed, but they don't exist to the capacity they exist today. Like nowadays, like literally every influencer is talking about funded accounts. But like if you look at trading from an old style of trading, you're always going to have like your own money that you're going to manage, because you're managing a business, right? And all good businesses, they have their own money that they're also having like some kind of a good control over. Even when businesses get funding from other companies, that money is in their pocket and they have control over how they spend that money. They can steal that money, they can invest that money. But with a funded account, that money is not yours. It's like in a pool somewhere. And if you make money, then, you know, awesome. But you have no real control. And I think like brokers already give us enough leverage to do what we need to do. As back in the days, you would not have leverage and you couldn't trade without having at least $5,000. But nowadays, you can open an account, $500. You can access real-time markets from the comfort of your home. It's a lot more easier. It's a lot more accessible, you know? So I'll just be a bit cautious with like these new things. I just focus on the skill and focus on actually building wealth, like, and having control over that. Or, yeah. Because you don't need it. You don't need it. Like, a lot of you look up to trader like Roger Banks, for example, right? He's a good example of what I mean. When you make money, you're gonna invest that money. If you look at Roger, for example, he's not a child. A lot of these people are like children. But like he's more mature in the sense like he invests his money, he has properties, he's running businesses aside from trading. You're not going to catch him wasting time on a funded account. You know what I mean? Because that's just, it makes more sense that if you have a skill, you're going to make money. Not in trading only, but even outside of trading. Because, you know, like you build a certain character. But that's just my perspective. If you like funded, like awesome, go for funded. There are these influencers who are going to tell you about funded and they trade like millions of dollars in funded. It might be true. It might be for affiliate marketing. Who knows? But at the end of the day, I just want you guys to have control over your money. That's it. And then just use that as a platform to get to where you need to be to have that exponential growth. Yeah, he has his own prop firm. Exactly. Like he has his own prop firm, which is also part of a business that he runs. So would you rather be the guy who works or trades on a prop firm, or would you rather be the guy who owns a prop firm? You know what I mean? It's just a mental attitude towards things. Because, you know, as me personally, I don't like asking people for help. My character is like that. Like even entrepreneurs, I think we personally don't like asking people for help. We like to do things ourselves. You know, that's just my character. Like even just the other day, I was doing electrical wiring in my house because I didn't want to have a electrician in my house. You know, that's just my character. I like to do things myself because I think, you know, as a man, you should be able to do things yourself. You shouldn't always be looking for handouts. And a funded program is like a handout. You know, it's good to start, but you don't want to always be looking for that handout. How do you read the daily bias indicator? Waiting just means like, just wait, just sit on your hands. So if you have like, let's say if you want to take a buy. Oh, I say like, there you go. If you want to take a buy here, it just means that there's no strong buying pressure on the daily. Right? So it's like mixed bias. You can think of it like a mixed bias. See, this is the DXY market open, and that's Asia session highs. Boom. So there's no either buyer or seller in control. So if you have a buy or a sell here, it's like both can work out. But if it was saying bullish, then you would have naturally a higher probability to move upwards. Because there are some days you're going to realize like some sessions, they just move in one direction. And if you just hit buy, you could have made money. But the only problem is like a 50-50, you're flipping a coin and you hit a sell and you just so happen to be on the wrong side of the market. And I think this kind of like, it's like a tool that you can use, and then you got to use the EYES one too. If you don't use the EYES indicator in confluence with the daily bias indicator, then you know, then there's going to be a problem there. What's my strategy? Price action. So prop firms are a good way to practice without losing your own money. But it's expensive, right? You pay for a prop firm. What kind of account are you paying for a prop firm? It's just excuses, man. Like, people just put so many excuses for themselves. A good way of learning without losing your own money is put what you can afford to lose. Because when you come to investing, that's already a good habit to practice, is put what you can afford to lose. At least start understanding that concept first. Because look, if you're going to pay $500 on a funded, there's a lot more restrictions. The spreads are typically not as great. The price action looks quite different. If you compare price action on a funded to FXCM, for example, it may not look exactly the same. There's just small little nuanced things these companies do to make it a lot more difficult for yourself. So why are you already making it more difficult for yourself than it already is from the beginning? Why not just put like a $200 account? This is not financial advice, but I'm just saying, if you're just still learning, why not just put a $200 account and trade that in ideal market conditions with a broker you're planning to be with maybe for the next 5+ years? You know, build a relationship with a broker, build an understanding of how price moves on that broker. And then, like, you know, steadily start to grow that account. Because if you can grow a personal account, trust me, you're not going to have problems getting money. That's a beautiful skill about trading, is if you're good, money is not a problem. You will get money via funded accounts, via compounding. That will not be the issue. So what you're doing is you're working from point B to point A. You already want to be trading like a trader who has earned, but you haven't earned anything. You're just masking a psychology problem that you can't trade your own money. So it feels better that you're going to lose someone else's money. But in reality, you're just losing your own money. That's how funded programs work, because most people lose money. So you're actually just giving them money right off the bat. You know, you pay for the challenge. You're not going to get a refund. You've given them the money. If you're in a broker, at least you can pull your money out if you don't want your money in the broker anymore, correct? And you always got to look at it from all these types of different angles. Like, you know, what makes sense? Because I used to think in the beginning I was an unprofitable trader because I did not have a big account. And I got my account to a big enough size and I was still losing money. You know, so don't mask the problem. You got to approach it direct, head on. It causes a lot of problems, you know, like when you try and avoid problems. You have to be able to have those hard conversations with yourself and with those around you, because that's how you help them grow. If you have a buddy who wastes a lot of time in his life, you got to tell him, hey bro, I think you're wasting a lot of time, man. Like, this relationship you have, I don't think it's a good relationship. You got to tell your buddy that. You can't be a yes man all the time. And that only starts with you. If you want to make a change in the world, you got to make a change with yourself first. So like, everything you're going to do outside of it, it's just going to be a reflection of your own attitude as well. So I would say, man, just start building those good habits now and really play the devil's advocate. You know, do you really need to do a funded? Do you really need a big account when you're not profitable? Do you need to invest in something else? Maybe your education. It took me like maybe 6 months before I bought my first course, because I was like, man, I'm just going to go on YouTube University. You know, I was arrogant. I thought I could do it. But, you know, it came to a point where I needed to invest in my education. But, you know, for everybody's journey is going to be different. For some people, it's going to take longer to understand this. For other people, it's going to take shorter. But what you don't want to do, you don't want to waste time. Whatever it is you're doing right now, you're basically an entrepreneur. And as a good entrepreneur, you got to always play the devil's advocate and don't waste time. Those are the best entrepreneurs. Not the ones who think things are going to be good, but the ones who think things are going to be hard. And so you got to think about, as I always love to say, warrior in a garden, don't be a gardener in a war. You're a gardener in a war thinking you're going to be protected by this funded account. Put your real money on the line. Put even $200 on the line. Do it like you're already doing it professionally. Imagine yourself a year from now, maybe 2 years, however long you think it's going to take you. Imagine yourself and how you're already going to be doing, like trading your own personal account, managing your risk, being disciplined. Like just imagine it, you know, and start doing that. Even on a $200 account. Because you're trading now like you're going to trade in the future. If you trade a small account now, and let's say you need these really low risk, high reward trades, you won't be able to trade that when a one-to-one is already paying maybe 1 month of your 1 month of your expenses. If you see at a one-to-one, price is up, let's say $3,000, for example, you're going to want to take that money. Your psychology is going to shift from seeing a one-to-one, let's say at $50, right? $50 you can hold a bit more. So you already kind of want to imagine yourself at a higher level and just keep working on the skill. Then the money will come to you. It will be attracted to you. I wasted 8 years for a girl, not even a wife. Yeah, and I see that happen a lot with some of my buddies as well. And I'm just like, damn. You know, they're going to learn the hard way. So I always look at life from other people's experiences and say, okay, you know, how could I mitigate this risk? You know, how are you going to go into a relationship when you don't even have your own shit sorted? You know, you're just putting your trauma on top of someone else's trauma, and that just creates a really bad environment for later on. So it's like, man, if you want to help somebody out, you got to first help yourself out. You got to sort your shit out before you start including other people in your shit. And it's just the same thing. If you notice people in trading are blowing a lot of accounts, you got to look at that and say, okay, you know, what can I do differently? What are these guys doing that they're having this experience, you know? And most of the time it's risk management and over trading. But I think like making money should be boring. Like if it's boring, you know you're doing it right. If it becomes like very systematic. I bought a course that appeared to be a total scam, never buying a course again. I mean, that's up to you. If you never want to learn again, that's up to you. That's like going to school. That's like going to school and realizing at the end of your education, there's no jobs left. And you're like, damn, man, school is a scam. I got my degree here, but there's no jobs. What the hell is this? And you say, man, I'm never going to learn again. I like funded accounts. It really forces you to refine your strategy. You need a high win rate to pass a funded account one-to-one. And if you can't squeeze a bit more out of your strategy, maybe 1 to 1.5 min. Yeah, I think a strategy which can push is always a good strat. Like if you can do like 1 to 2s easily. You don't have to always secure a 1 to 2, but at least you get the option. Some strategies might push like 10 pips and knock you out of break even. You know what I mean? Like there are these people who have strategies where most of the time it's hitting their break evens. So you kind of want to like get the perfect balance, you know, perfect balance to break even ratio to, you know, a good push and a good stop loss. It takes time. It takes a lot of time. It's not a coin flip. It's just consistency. If life was a coin flip, that means everything would just be 50-50. No matter how bad that you wanted something to be true, the universe would have already flipped the coin and said you could never do this. But you see, the universe is not like that. It's much more like if you put in the work and if you're consistent, anyone can achieve anything. You know, within a reasonable thing. Like you can't be 50 years old and expect to play in the NBA, for example. But you can be 50 years old and learn a skill that's going to make you a lot more wealth for the rest of your life because you're just using brain power. So what I'm trying to say is like life is not just 50-50. You know, you can make it happen like with consistency. And that's why, like, I meant, like, everything takes time. Trading takes time. Everything takes time. You don't see it. You don't see it, like, let me show you right here. You see, you don't see it in the beginning. You only see such a small bit of it. But if you just keep going, it starts to unfold. And the story, it becomes a lot more clean. A lot more, like, understanding. Then you're going to look back at your progress. You're going to take a break over here and say, damn, you know, I've seen my results. Because if you look at your results as a beginner trader, this is how maybe it looks. Like, just roughly, right? This is how maybe it looks. And then after the first month, boom, this is your second month. I'm going to put everything back. This is your second month. Maybe just a few less losses. You see a little bit of improvement, right? A little bit of green in there. All right, nice. Let's try another month over here. You're going to try again, and maybe you're going to see a little bit more green. And then maybe the next month is going to be like this, like really bad. But it's just a learning progress. You know, you shouldn't let that throw you off, because the next month after that might even be something a lot more cleaner like this. Because through all these L's, you've gotten so many lessons from that it's just like building your character. So you just got to keep going, right? If you do things with integrity and in a way that you're being honest and you're truly trying to better yourself, the universe will step aside and will say, man, this guy right here is putting in the work. This guy is actually trying to be disciplined. So, you know, we're going to give him a reward for that. How often do I go live? I go live Monday to Friday at 3 a.m. Eastern. Just London Open there. YouTube Academy, yes sir. IML, remember IML? Man, IML was wild. You would not get paid to trade. You'd get paid. It was a trading academy, but you get paid to affiliate market. You introduce people to learn how to trade, but you don't make money trading. I thought it was like in 2020. I don't know. It's probably still exists today. I've never blown a funded account. I manage my risk very hard. Draw down 5%. You remain disciplined and follow a strat. Nice. Battlefield end of stream today. Oh. I low-key wanted to play Battlefield, but I feel like it's kind of late now. Demo accounts don't help if it's similar to that. I turned 50k to 180 and thought it was easy. Then I put my own 2k and lost it in the first 5 days. Yeah, the demos are different psychology for sure. See how London is that closer, not being above entry is nasty. It's a very nice little mini accumulation that's happening here though. How would CAD news tonight affect gold price? It won't. It won't affect gold price. I think with CAD you got to look at oil. You can see what oil, what's affecting oil, and then you get a good idea of what affects CAD. Because if there's a lot of demand of oil, then the Canadian dollar should go up because that's our main GDP is oil. So yeah, keep an eye on OPEC and all those things. AI rally fears and China trade woes chill stocks. Crude futures on track for weekly loss on oversupply concerns. Geopolitical disruptions such as Ukraine attacks on Russian refineries and renewed US sanctions on Rosneft and Lukoil have added modest upside risks. Overall market tone remains bearish as supply growth continues to outweigh disruption risks despite lingering volatility. Traders now await monthly reports from OPEC and IEA next week for more insights into supply and demand trends. Yeah, like man, like during COVID, there was such a less demand for oil. Obviously, the Canadian dollar was really taking a beating. But you see, oil right now is bullish. On the daily, you can see right now the indicator says it's bullish, and it's up 1.52%. Holy. It's trading at $60 a barrel. We just cracked $60. We're just hovering just about $60 here. Nice, man. That 60 is like the 4,000 on gold. Here. I was playing poker on a game and I was hoping to lose my 50M but end up turning it into 600. The same thing happens on my demo. Sometimes I just want to blow an account but always make profit. You're trying to like lose a trade and it just goes in profit. Reverse psychology. It's like when you're gonna play PlayStation 2 and you put the CD in and you think if you look away then the game is gonna load. And you're like, okay, so I don't care. You're gonna look away and say I don't care. Or you're gonna put a trade like this and you're gonna look away and say you don't care. Because when you care, it always the market will come and play with your emotions. And do this. What does bias stand for? Canadian housing market is trash. It's quite expensive, right? It's really expensive for what you get. Currently, the dollar index showing some downward rejection, so it's not ideal time to jump into USD/JPY. Also worth noting, USD/JPY has shown a good reaction from the daily demand. All right, W analysis. H4 demand, H8 demand. All right, chat. I'm gonna call it a day here. I hope you all have a good weekend. I will see members in the mentorship on Sunday. We're gonna run a little simulation here, and let's hope next week the daily can break above a 40.25, and we're gonna have a pretty good week next week. So I'll see you all then. Adios. Take care, everybody. Enjoy your weekend.